Right now, first-time home buyers are losing thousands of dollars, and not because home costs too much, because of one mistake they don't even know they're making. In the next 10 minutes, I'm going to give you the full home buying checklist for 2026, and I'm going to show you the 5 mistakes that wipe out first-time home buyers before they even get the keys. And mistake number 3 is probably happening to you right now, today, while you're watching this. Here's why this matters. Most people think buying a house goes wrong at the price tag. It doesn't. It goes wrong in the paperwork and in the year after you move in. In 2025, a study from Bankrate found the average homeowner pays over $21,000 a year in hidden costs on top of the mortgage. $21,000 a year. And with mortgage rates sitting around 6.6% right now in 2026, one wrong move on your loan can cost you tens of thousands of dollars over the life of it. This isn't a video to scare you away from buying a home. It's a video to help you buy it the smart way. Here's exactly what's coming. First, the credit mistake that gets people rejected, and it's not what you think. Second, the down payment myth that stops people from even trying to buy. Third, the one thing you should never ever do between getting approved and closing day, because this single mistake kills more home deals than anything else on the list. Fourth, the hidden cost nobody warned you about until the bill shows up. And last, I'm going to show you where to find real money for your down payment, sometimes $25,000 or more, that you never have to pay back. Stick around for that one. Most people never even ask if it exists. Mistake 1, the credit mistake. House hunting before you know where your credit actually stands. Here's what happens. People fall in love with the house on an app, call a real estate agent, and go look at homes before a lender has ever pulled their credit. Then 3 weeks later, they find out their score is too low and their debt is too high, and the whole thing falls apart. Now they're heartbroken over a house they were never approved for in the first place. The fix is simple. Get pre-approved first, not pre-qualified. Pre-qualified just means you told a bank what you think you make. Pre-approved, on the other hand, means the bank checked your income, your debt, and your credit, and gave you a real number in writing. Here's the proof this matters. For an FHA loan, most lenders want to see a credit score of at least 58%. For a regular conventional loan, it's usually 620. Below that, you're not getting denied because the house was too expensive. You're getting denied because you skipped a step. Fix the step, fix the outcome. Mistake 2, the down payment myth. Believing you need 20% down to buy a house. This one alone stops thousands of people from even trying. It's just not true anymore. An FHA loan only needs 3.5% down. A conventional loan program called the Conventional 97 needs just 3% down. And if you qualify for a VA loan or a USDA loan, you can put $0 down. Here's the proof. On a $380,000 home, 20% down is, say, $60,000. Almost nobody has that sitting in a bank account, but 3.5% down on that same home is around, say, $2,500. That's a completely different, completely reachable number. Yes, a smaller down payment usually means paying mortgage insurance, called what is called PMI, until you build up enough equity. But PMI is not the enemy. Waiting 5 extra years to save $60,000 while rents and home prices keep climbing usually costs you more. Mistake 3, the closing day killer. This is the big one, the one that's probably happening to someone watching this video right now. Once you're approved for your loan, do not change anything about your money until after the closing. That means don't quit your day job or switch jobs. Don't open a new credit card. Don't buy a car, furniture, or anything big on credit. Don't move large chunks of money between bank accounts without telling your lender first. And don't co-sign a loan for anyone, even your own family. Here's why. This one is so dangerous, most buyers don't know their lender rechecks their credit and their bank accounts right before closing. If your debt went up or your income changed, or there's a mystery deposit in your account, the loan can be delayed or denied days before you closing on a house. People lose their dream home over an $800 couch bought on a store credit card. The rule is simple. Once you're approved, freeze your financial life exactly as it is until you have those keys in your hand. Mistake 4, the hidden cost. Budgeting for the mortgage payment and stopping there. The mortgage is just the beginning. You've also got closing costs, which usually run 2 to 3% of the home's purchase price. On that same $300,000 home, that's around $9,000 due basically at all once. Then there's property taxes, homeowners insurance, and if you put down the less than 20%, that PMI we talked about earlier, and remember that number from earlier, over $21,000 a year in hidden costs according to bank rate. That covers things like repairs, maintenance, utilities that are often higher than renting, and generally the water heater just died emergencies. The proof is in that number. $21,000 a year is close to $2,000 a month just in extra cost on top of your mortgage. If your budget alone has room for the mortgage payment, it doesn't have room for the house. Mistake number 5, the free money nobody asks about. The one that costs people the most money without them ever realizing it. Never even looking for down payment assistance. There are state and local programs all over the country built specifically to help first-time home buyers. That means you, to cover their down payment and closing costs. These aren't loans you have to pay back. Many of them are grants. The amounts vary by state, but they commonly range from about $5,000 up to $25,000 or more, depending on where you live. The proof: buyers who never ask about these programs pay their entire down payment out of pocket. Buyers who do ask sometimes walk into closing owing thousands of dollars less, using money they qualify for and simply never knew existed. A 5-minute search for your state's housing finance agency or a 5-minute question to your lender can put thousands of dollars back in your pocket. Here's your one action for today. Before you do anything else, call a lender this week and ask to get pre-approved, not pre-qualified, pre-approved. That one phone call is what separates the people who buy a home this year from the people who still scrolling listings a year from now. If you're buying in Northern Virginia, DC, or Maryland, don't try to figure it out all alone. Contact me using the information in the description below by sending me an email. Let's talk about where you are today and what needs to happen for you to become a homeowner. Please like, subscribe, and turn on notifications. Thank you for watching, and I'll see you in the next video. Take care.